How to use AI in the shadow banking system. Shadow banking equals non-bank credit intermediation, private credit funds, PE/hedge funds, MMFs, securitization conduits, finance companies, repo markets. The pain points are underwriting, liquidity/ALM, collateral valuation, ops scale, and compliance across fragmented data. Here's a focused AI playbook you can actually deploy. Where AI adds real value: 1. Credit origination and underwriting, private credit/direct lending. LLM.ai. Parse term sheets, covenants, borrowing-based certificates, and financial statements. Auto-extract risk factors, covenants, and red flags. Counterparty/sponsor risk. Graph models plus entity resolution to map ownership webs, related party exposure, and cross defaults. Alternative data scoring. Combine statements with cash flow data, ERP exports, trade A/R, card sales, shipment data, gradient boosting for PD/LGD/AD. What if covenant testing? Simulate shocks, revenue -15%, rates plus 250 BPS, and predict breach likelihood. 2. Liquidity, collateral and ELM, repos, conduits, MMFs, intraday liquidity nowcasting, time series ML on subscriptions/redemptions, settlement calendars, collateral calls, and macro prints. Haircut and margin anomaly detection. Autoencoders flag outlier haircuts versus collateral quality and market volatility. RL for buffers. Reinforcement learning suggests dynamic liquidity buffers/laddering for commercial paper and repo. 3. Valuation and pricing of illiquid assets, private loans, ABS/CLO residuals, few-shot valuation. Combine comparable trades plus structural features, seniority, covenants, performance triggers to estimate marks with uncertainty bands. LLM-assisted waterfall modeling. Convert indentures into executable cash flow waterfalls, scenario runs, prepay/DPD/charge-off paths. 4. Surveillance and early warning borrower health monitors. Multivariate drift models watch DSC/EBITDA, days sales outstanding, inventory, payroll tax liens, litigation feeds. Knowledge graphs for contagion. Link co-lenders, suppliers, sponsors. Simulate default propagation and correlated draw risk. 5. KYC/AML and compliance at scale. Name screening plus adverse media NLP. Entity disambiguation across jurisdictions to fund flow pattern mining to detect layering/smuffing in subscription/redemption and SBC/SPE structures. RegTech Copilot. LLMs generate/validate Form PF, AFMD Annex 4, Rule 2A, 7, and risk memos from underlying data. 6. Operations and fund admin trade confirmation bots. NAV explains. Fee/rebate reconciliation, waterfall distributions, and investor letters. LLM agents draft, humans approve. Document Q&A. Secure chat over. Data rooms, PDs, servicer reports, trustee notices, with lineage back to source pages, model and data patterns that work. Document AI. OCR plus layout parsers, bank statements, B-based certs, indentures, structured JSON to time series, gradient boosting, cat boost, light GBM, simple, robust, auditable, graphs, GNNs or simpler PageRank style features to score interconnected risk. Anomaly detection, isolation forests/autoencoders for haircuts, flows, valuations.rl, policy suggestions for liquidity buffers, and role strategies kept in decision support, not auto-execute. Governance, non-negotiable, model risk management, SR11-7, style inventories, use case classification, challenger models, backtesting, explainability, SHAP for credit/valuation, templated reason codes for committees, data controls, PI minimization, legal holds, confidentiality rings for LP/GP, secure enclaves for bank-like partners. Human in the loop. Mandate sign-offs for underwriting, valuation changes, and liquidity moves. A 90-day pilot you can run. Goal: covenant extraction plus early warning for a private credit book. Week 1 to 2. Stand up a secure data lake. Ingest 50 to 100 deals, PDFs, XLS, trial balances. Define 20 target covenant fields. Week 3 to 4. Fine-tune an LLM on your docs. Build an extraction and validation pipeline with confidence scores plus human review UI. Week 5 to 6. Train a simple PD deterioration model using borrower KPIs plus macro factors. Wire alert thresholds. Week 7 to 8. Add a liquidity dashboard. Forecast draws, prepayments, and redemption risk. Week 9 to 10. Backtest on 12 to 24 months. Measure recall/precision of covenant flags. Calibrate alert fatigue. Week 11 to 12. Roll to one desk. Write policy, controls, and a board-level summary. KPIs: 60–80% reduction in manual covenant extraction time, plus 15–25% lift in early warning lead time, days before breach. 5% material false negative rate on breaches. Auditor acceptance with traceable data lineage. Build/by stack, pragmatic, storage, and lineage. Delta Lake/BigQuery plus data catalog. Doc AI, LLM with retrieval over a vector store. Add a rules engine for totals/ties out. Risk apps, Python microservices, fast API, feeding Streamlit/retool dashboards. Controls, feature store with versioning, SHAP server for explanations, prompt/parameter vaults, approval workflows.